All right, fam, I just put $50,000 into Nike. And in this video, I'm going to explain to you guys why I did that. If you're having trouble in the market and these strategies I'm about to show you and these technicals, fundamentals, financials, and these terms and phrases that I use confuse you or you don't understand it, I offer a full training course, Discord, and one-on-one coaching so that I can help you not only grow your financial freedom and your financial wealth, but give you time and location freedom to live the life that you ultimately deserve. I told myself when I achieved financial freedom, I would do everything I could to help others grow their financial freedom. However, I can't take everyone as it's a very serious mentorship. Limited spots remain. If you guys would like to sign up for the Discord, the training course, and one-on-one coaching with me so you can take control of your life, you can sign up at any time at investwithcorey.com right there on the screen or in the information box below. Like I said, it's a very serious mentorship, and my students, a lot of them are up 20% their first month and 20 to 30% or more in their second month. This sounds like something you're interested in. I would love to hear from you, and I can't wait to see you in the coaching. So let's dive right in, and let me explain to you guys why I put $50,000 into Nike and why I believe it is a very strong play going forward. So here you guys can see my position in Nike. I put $41,560 into Nike here, and I put $3,000 some odd dollars into long leap calls, and I also have another $15,000 with a Nike in my large portfolio. So realistically, I have closer to $60,000 in Nike over the last couple of days. But in this account, I have almost $42,000. Now, if you're wondering, like, why would I invest this much money into Nike? Well, there's multiple reasons. Nike is a solid company with good revenue, good earnings, and they beat the earnings last time, although they missed slightly on revenue and their guidance was narrowed for the next earnings report, which is September. But they're in the consumer brands and durables. And this is a sector that suffers when interest rates are high and consumers are not spending. However, the PMI data that came out in August said that the services industry was flourishing and the PMI data for manufacturing was down slightly. And this is due to interest rate. But now that we know that we're pretty much going to get interest rate cuts in the coming few weeks leading into September, and we're going to have sequential rate cuts over time, consumer spending is going to get better and improve, which means retail like Walmart, Wayfair, Target, TJ Maxx, and fintechs like SoFi, Robinhood, PayPal, and Block, Amazon, Apple, they're all going to do well, including Nike. Even Starbucks is on the recovery with a new CEO. The real fair value for Nike is around $105 to $120. Right now, they're very undervalued due to a missed revenue and a lower expected guidance. So let's go ahead and look at their price to earnings, price to sales, their revenue. But not only that, I'm going to explain to you guys where I think Nike is headed and why. Look at the chart here, and anytime we see a stock that sells off like this and a massive gap on the daily chart, like Nike did right here, we go ahead and we draw a box. And this box is going to show us exactly where the gap fill happened so we don't forget. And we're going to draw it touching this bottom green candle over here in the top of this red candle right there. And I do all of my gap fills in yellow. And I'm going to bring this over here a little bit, lock it so that it doesn't get moved. We can see that Nike actually gap filled up from 79.02 to around 80.69. There is a dollar gap here, and gaps are really hard to break through. If they're above the stock price, they are resistance. If they are below the stock price, they are support. So Nike is in between two gaps, and with dividends and earnings coming up, it's likely to push higher into this gap. It could fall and fill this gap and hit support at 78.90 or 78.66, which will kind of set it right on par around the $79 range. Now that is possible, but then it's just going to bounce, trickle, and move back up again. We are bouncing off the 100-day moving average, but we are also bouncing off of the 10-day, which is above the 20-day, and we've been in an uptrend for the past 2 weeks leading up into the dividends. If the stock holds during some sell-off on Tuesday when the markets open back up due to getting out because they only really got in for dividends, that is, then we're going to be okay. If the stock can hold, we should be okay, and the price will kind of consolidate and move its way back up in time for earnings in a couple of weeks. My price target leading into earnings is about $86 or $87, maybe even $90 is possible. If they beat earnings by a decent amount on revenue and EPS, we could see the price get back up around $92, $93, maybe even a little higher. So we really have two options here. A lot of people don't sell on Tuesday and they just hold after they get their dividend because it's the X date. As long as you have the shares on the X date, you get the dividend and you can still sell the shares and they're still yours. Whoever owns the shares on the closing bell the night before the ex-dividend date, they get the shares no matter what, even if they sell on the ex-date. So Robinhood closes the markets at 8 p.m. and then turns on the overnight hours. Not every brokerage has 24 hours, but they all close extended hours or after hours at 8 p.m. So as long as you own the shares of the underlying asset or stock prior to the after hours close at 8 p.m. the day before the ex-date, you get the earnings. A lot of people are going to want to sell this stock during the after hours, 8 p.m. A lot of people are going to try to sell this stock come Tuesday. And Robinhood has after hours that starts at 8 p.m. Sunday night and runs all the way through till 4 a.m. when the early pre-market opens. And a lot of brokerages don't do this. It's their 24-hour market. Most brokerages open up at 7 a.m. Webull opens up at 4 a.m. and Robinhood's 24 hours and they open up 8 p.m. on Sunday night. Between 8 p.m. Sunday night and 7 a.m. Monday morning, things can happen. But with Labor Day here, the market's not going to open with Robinhood until 8 p.m. Monday, and the rest of the markets are going to open up at 7 a.m. on Tuesday. So if a lot of people sell this off in the overnight hours, we could see a pretty big jump in the morning. If they don't sell it off, we could still see a pretty decent jump on Tuesday morning. So I'm just going to play this by ear, see what happens. I'm going to get out for the dividends. If the stock starts to come down and falls slightly below 83, I'll get out for a small $40, $50 loss because I'll collect $200 in dividends. But if it stays at my price or relatively close to it, I'll wait to see if it runs and I can start selling covered calls. But my options are really endless, literally and figuratively. If we look at this big ginormous gap though, and this small gap down here, we're actually going to overlay two gaps, which is right here. And we're going to change the color of this one slightly. We'll change this to like a pinkish color. There we go. And we'll lock that. So there's a gap here, and this gap will act as support while it's filling up all of this gap. And like I said, all gaps essentially fill, most of them at least. This is on the support of a small gap right here, but it's moving up, filling this gap. So it's also likely leading up to earnings that can come up here and gap fill and then drop. But for someone like me who's invested this much money, as long as it starts working its way up, I'm going to collect a bunch of profits and dividends. But in the long course here, going for the long play, if earnings meets or beats, essentially Nike is going to end up back over here, which this right here is about $6,000 profit on shares plus dividends. So this is about a $6,500 to $7,000 profit between now and the spring. Sure, that may not sound like a lot, but you add in covered calls, which is going to be like another $1,000 to $1,500 a month. This realistically is going to be closer to $12,000, which on $40,000, this is like a 25-30% return in about 6 to 8 months. This is an incredible return, and it's safe because Nike's a solid stock. There's also some downside that Nike could fill the gap, obviously, and pull back down in the 74 range, which I would lose $5,000, but I'm not going to allow that to happen. I've got, a certain amount that I'm willing to let go on this stock in order to make the profits because I believe in the stock. But ultimately, with this gap being filled, it's going to consolidate right between 80 and 83, and I think it's going to start running for earnings as we get closer and for the next earnings, which is going to be in December somewhere over here. So that's why I believe it's going to consolidate, run a bit, or if it consolidates, drops, and then runs a little bit. Either way, by the next earnings with rates being cut, it's likely to be up here in the $88 to $90 range. But if you're holding long, and you're not in any rush and just selling covered calls, this is a great investment. We look at the market cap. It's 125 billion market cap. What we're going to do is we are going to divide the market cap by the trailing 12-month revenue. So we're going to divide 125 billion divided by 5139 billion, and we get a price to sales of 2.43, which is pretty damn strong. What we're going to do now is we're going to divide the stock price of 83.32 by the EPS, which is $1.01, giving us a PE ratio of 82.49, so almost 83, but I guess it's closer to 82. So an 82 PE ratio. Now, the price to earnings you see here is 22.34, but there's a reason for that. What we're going to do is look for the trailing 12-month EPS. And in order to get the trailing 12-month EPS, you just add up all of these, which would be like 396. And we can see here the basics earnings per share year-over-year growth is 376 for the the year. So we're going to take 83. I paid 83.25. We're going to divide that by 376 trailing month, giving us 22. So Nike has a PE ratio of 22 and a price to sales of 2.4. That is incredible. Let's take a look at their EBITDA. 6.84 billion trailing 12 month, 1.74 billion in the recent quarter. Revenue 12.62 billion, 51.39 billion trailing 12 month. Operating income 6 billion on the trailing 12 and 1.49 billion in the recent quarter. Net income 5.7 billion and 1.5 billion for the recent quarter. Cash flow 2.41 billion trailing 12 months, 6.62 billion. This is incredible. Operation activities 2.62 billion trailing 12 month, 7.43 billion. The balance sheet 37.36 billion in assets trailing 12 month is over 38 billion. Net debt 1.53 billion. Very low debt compared to their income. Their positive cash flow is enough to pay off all of their debt. So they've obviously amortized their debt. So no real concern here. Everything is looking very solid. Investing activities, they've obviously put money into investing activities, which most of it has come from capital expenditures on fixed assets. And of course, they have also purchased investments and sold maturities. Financing activities, they've also repurchased common stock and dividends cash paid. So they're negative 1.42 billion in financing activities, which is what's slowing down the repayment of their debt or their profits, but that's because of dividends and the repurchase of stock. No reason to be alarmed in this scenario. In reality, the only thing that's bad about Nike is the lower guidance expected for the next quarter. If they meet and even beat it with interest rate cuts and PMI data, Nike is going to go up. If everything I've just showed you with the technicals, financials, fundamentals, if all of this is really hard for you to understand, whether you're a beginner or you've been trading for a while, if you're looking to get better in the market, this is confusing for you, and you're having trouble being profitable, I would love to help you grow your financial freedom and your financial wealth. I offer a full Discord, full training course, and one-on-one coaching so that I can help you grow and help you learn in the stock market. If you guys want to sign up, you can do so at any time at investwithcorey.com, right there on the screen, or the link is in the information box below. This is a very serious mentorship, so you have to take it seriously and be committed so that I can help you. We don't take everyone, and I have very limited spots. And I just launched a masterclass boot camp, which only has 3 spots remaining, and those are even more limited than the regular coaching. I have students in my Discord that are up 30% in their first month, others that are up 60% in their second and third month. All of my students are profitable. All of them are making money. I'll be waiting for you, and I hope to see you soon. So you can see here, I ultimately would sell an $83 put on Nike. 5 contracts, about $1.20 each. You might get $1.10, but this will get you $600 a week. That's $2,400 a month, and on $40,000, that's about a 7% return, giving you an average cost if you get assigned of $82.80. Actually, $81.80. So this right here is awesome. If you get assigned, $81.80 is your average cost, and it's likely the stock will end up in the high 82s or 83s, or maybe even higher after the dividends pay out on the X date on Tuesday. Well, they don't pay out, but that's the record date. The dividends, X date, and the record date. So after that, the stock is likely to go up. And if it does, then you are going to collect all this free premium week in and week out. If you get assigned, your average cost is $81.80. Like I said, it's a long place. So if you can get in and stockpile Nike and dollar cost average with these puts, you can get in several hundred shares and be around $81 to $82 average cost. And when the stock runs to $90 or $100, you have a 20% return in as little as 6 months while selling covered calls and collecting juicy premium from the dividend. Well, this video is over, but I picked you another one, and that video is right there. Click it and I'll see you over there. I'm in 2 places at once. Hey, remember, until the next video, let's grow our wealth together. Take care, fam. Click that video.